All right, welcome back. Welcome back. In this presentation here, we're going to talk about non-QM loans, non-qualified mortgage loans. Okay, so this will be all the different ways that you can purchase a home without doing the traditional way of going about things, right? There is there is the regular mortgage loans. We're talking about traditional, conventional mortgage, FHA. I'll put that in there as well. Those are like the traditional ways, right? Uh, Now, non-QMOs are essentially loans that doesn't fit in this category. So perhaps you don't have a 2-year work history, or you are self-employed, and you need to get a mortgage loan using your bank statement, right? Or you need other ways to qualify for the mortgage. Maybe you qualifying through the assets that you have, right? In with non-QMO, all of that is taken into consideration. Okay, so why non-QMO? Well, as I talked about earlier, right? Every person out there has a different situation, and different situation there's different loan products that exist out there. Excuse me. Of course, the most popular ways of buying a home that we all know of is just the traditional way, conventional loan, FHA, those popular ways, right? But non-QMO do exist, and they actually have a market. There's people who actually do these type of loans. Okay, let's start off with bank statement loans. Lenders will often ask anywhere between 12 to 24 months of personal or business bank statement loans. So if you have a business, maybe you want to buy a property, and you're a business owner, they pretty much will allow you to use your business bank statement as a way of having like the proof of income that you can actually afford this based on the cash flow that you have coming in every single month in either the personal or the business bank account. Okay, now this is often much popular for freelancers, 1099 contractors, small business owners, self-employed, right? Now, when it comes to these loans, oftentimes the down payment is slightly higher compared to what we talked about earlier. Again, these loans are much more flexible compared to what we saw earlier. And then you have asset depletion loans. You can essentially liquidate some assets to actually get this the mortgage itself, or they can use based on the assets that you have. I believe they might be able to use some as a collateral to kind of, just in case you ever default on a loan, they'll take your assets can back it up. Okay, but there's different ways to go about it. And then you have a DSCR loan. A DSCR loan is a debt service coverage ratio loan. Now, this is extremely popular with investors who are looking to purchase properties. Now, DSCR loans, I think the lowest down payment, it does depend on the relationship that you have with the bank or who's loaning you that money, right? If you have a good relationship, they might do 10%. But I think the lowest that I often see is anywhere between 15 to 20%. That would be like the lowest. But then you have a situation where you have to put 25% down. But it's very common to put 25% down, 20 to 25% down. But again, depend on the relationship that you have with the bank, right? Speaking of relationship, it's very important to build a relationship with different banks, different credit unions. Me personally, I just stopped banking with any large bank like Chase, Wells Fargo, Bank of America. I just cut my relationship with them. I'm now preferring credit unions. Credit unions have been great for me. Credit unions have different loan options that these big banks will not have. Credit unions are more flexible, so I'm focusing more on building relationship with credit unions and just cutting off the big banks. That's something that I'm now doing personally. Okay, and then you have interest only loans. Okay, so there's different ways to buy a property, and you have foreign national loans as well. All of these are different ways to go about it. Now, foreign national loans often require anywhere between 30 to 40%, so it's slightly higher compared to what we talked about earlier. So who qualify for these mortgages? People who perhaps have bankruptcies, charge-offs, investors, right? For investors, like I mentioned earlier, the DSCR loans is very popular with investors. Self-employed, perhaps your income is not very consistent, or you don't have a 2-year work history, right? Those are people who can qualify for these loans and use these loans. And it's important to just look at all of your options. What I'm doing here is pretty much providing information. It's up to you to do the research on every information that I provide here. 1, verify it. 2, look at it and see if it makes sense for you. 3, learn more about it. I think the more information that you have, the better decision that you can make. One of the worst things that you can do is make decisions when you have not looked at all your options. So explore all the different options. Listen to this video, look at all the information that I've put here, and do more research on the information that I've pretty much put here. Verify what I'm saying. Look into it. Does it make sense for you, right? Nothing that I say here, it's any advice in one way or another, but it's just me sharing information because I think information is very powerful. Now, what you do with this is up to you, but I'll encourage you that you use this information to better your situation and achieve your goals, right? That's something that I want. I want everyone to achieve their goals. Okay? But, and here's all the steps to non-QM loans. Again, I do want to emphasize that with all of this information that I'm giving out, everything that I'm talking about here, it's important for you to look at your situation. There's different loan products that you can use. That's literally the whole main point here. There's different products that you can use when it comes to buying a mortgage. You don't have to just do FHA or conventional. There's different products out there that you can use. Okay? And in the next video, what I'm going to talk about is portfolio loans with credit unions. I'm literally serious when I say that credit unions are now my favorite banks. Small banks are really good for me. I'm staying away from large banks such as Chase. I'm staying away from all of those. Okay? And here are some of the top non-QM lenders and portfolio options that are out there. Again, do your research. And always start in your city. Look at your city and see what options exist within your city. Because oftentimes, within your city alone, they could have down payment programs that you just don't know about because you never did any research. Within your city, that you could have a lender who fit exactly what you're looking for, but you don't know because you never did any research. So make sure that you do some research on this. Okay? Now, this was a quick video. I think that's pretty much all that I wanted to go over. I kind of did speed through it. I want to go more in detail on the portfolio lenders, some of the options that have 100% financing, 0% down. I want to go more into that, and also give you guys a few credit unions that are able to offer those options. Okay, that's pretty much it. See you guys on the next one. Bye.